to confirm whether we've gone live or not. We were supposed to get text, but we haven't received it yet. My apologies. We have? Okay, good morning, everybody. We just received notification that we've gone live. So it's 9 minutes after 10 on October 29th. Thank you for joining us for our quarterly Deferred Compensation Advisory Committee meeting. And this is Brandy Hopkins speaking for those of you who aren't sure. So thank you for joining us today. Donna Strange is going to start with taking attendance for our committee members.
Monica Nino.
And Monica, if you need to use the chat, feel free. I think she's having some audio issues. She's here. Thank you, Monica.
Thank you. Christine Babb.
This is
Can you hear us, Christine?
the microphone's on mute.
Yeah. Christine, are you on mute? I see that it looks like you're on mute, at least on the computer, but I know you also called in. Okay, we'll come back to Christine.
Okay. Jay Wilberding.
I'm here.
Morning, Jay.
Morning, Catherine.
Hey, good morning.
Here.
Good morning, Supervisor Miller.
Good morning.
Nancy Calkin.
She is not here.
Okay. Fonte Kyokum.
Here.
Good morning. Is that our,
That's the,
that's our committee?
yeah.
Okay. And it also looks like we have our county counsel, Jason Morris.
Good morning, everyone.
Morning. And then if our other speakers could introduce themselves.
Good morning. This is Bob Gleason.
Good morning, Bob. Vincent?
I'm here. Thank you for allowing me to present.
Thank you. David McRae.
Hello, this is David McRae. Hello, everyone.
Good morning, David.
Good morning, this is Eric.
Bob, would you like to introduce your guest?
Yes, thank you, Brandy. Everyone, Eric Wietzma from our senior leadership team is joining us today. I think most of you will remember Eric from last year. He serves in the executive sponsor capacity. We want to give you guys a direct link to someone in senior leadership. So Eric is joining us today, and he'll be providing an update on the transition to Empower in a few minutes.
Thank you. Thank you for joining this morning. And then we need to confirm that Sheena's on the line. She's also presenting today.
Hi, I'm here. Good morning.
Good morning. Is there anybody else on the line that we have not introduced?
Well, you introduced me, but I never said I was here. I'm here. This is Chrissy.
Hi, thank you.
And is there someone on the line whose phone number ends with the number 70? Can you identify who that is?
Okay, well, we'll move forward and we'll work on that. Thank you, everybody. Thank you for joining this morning. I hope everybody has their agenda in front of them. Our first order of business is to approve 2 sets of minutes. So if the committee can first look at the quarterly meeting of July 30th, 2020, and let us know if there's any discussion or if we can make a motion to approve these minutes.
Madam Chair, if you're so inclined, unless there's a discussion item, you can accept them both at the same time.
Thank you. I do. Oh, there is a discussion item.
Was it for
this one or this September? Okay, so we have a correction for the September.
Oh, I got you.
So are there any questions about the July 30th minutes? Thank you, Monica. Monica's going to abstain since she was not present for the July 30th meeting. Is there a committee member that would like to make a motion to accept the July 30th meeting minutes?
Sponsor, I'll make a motion to accept.
Supervisor Miller seconds.
Thank you. Donna will take our roll call since we are remote.
Okay. Christine Babb,
Yes.
Jay Wilberding,
Yes.
and Nancy Calkins.
Not here.
Oh, that's right. And Brandy.
Yes.
Okay.
Thank you. So we do have a correction to the minutes. If you have your minutes in front of you for our special meeting from September 22nd, 2020, and Tammy will explain the correction.
Yeah, this is Tammy Matuska, and through the chair, I would like to note that Nancy Calkins was left off, and she was present. We had some issues with having her say she was there, but she was there, and so we need to make sure she's added to the present members.
Okay.
Through County Council, can we make that correction verbally and still accept the minutes?
Yes, you can, as long as the motion is made in that manner.
Hello, this is David McCray. Regarding the minutes for September 22nd, I was not in attendance, but on the minutes it says I was. Very minor, and I'm not a committee member, but I just wanted to share that as well.
No, thank you for that. Are there any other questions regarding the minutes from the special meeting on September 22nd, 2020?
Supervisor Miller will move the minutes as corrected.
Thank you, Supervisor Miller.
This is Fonse, I'll second.
Thank you. Donna again will take our attendance on this matter.
Okay. Brandy.
Approved.
Christine Babb,
Approved.
Jay Wilberding.
Approved.
Okay, and I see Monica's abstaining.
Correct.
Thank you.
Thank you, everybody. We'll move on to public comment. So just a reminder that public comments are limited to 250 words or less and may be submitted by emailing sjcdcapubliccomments@sjgov.org, and that every effort will be made to read all the comments received into the record, but some of the comments may not be read due to time limitations. Comments received after an agenda item will be made part of the official record on file with the committee if received prior to the end of the meeting. Donna, do we have any public comment?
There are no public comments.
Thank you. We do not have any public comment. So we will move on to our program status report with MassMutual and Bob Gleason. And this is a handout included in your file. It says your plan review, MassMutual at work for you. That's the document that you're looking for.
And Brandy or Tammy, is it going to be displayed on screen, or do you want me to try to share my screen, or everyone will just follow with their hard copies?
If you could display your screen, that would be great. Donna has to watch for some other things on the computer that we're using.
Okay, let me see if I can share.
There we go. Thank you.
Okay. All right. Well, good morning again, everyone. And I will just take a few minutes to go through the report that's on screen here. It's the quarterly plan summary review. Both David and I will cover off this report, and then we'll turn it over to Eric. Like I said earlier, he will give you a little bit of an update on the transition of MassMutual's retirement business to Empower. So this is the third quarter report, and if you just look at page 2, the executive summary, first thing you see there, snapshot of plan assets and the change quarter over quarter. In the third quarter, plan assets grew by $20.8 million. which is roughly the amount of investment gain. If you look at the last item on this page, investment income was $20.7 million. So there was a slight positive cash flow into the plan over the course of the quarter. Looking at contributions, 4.1 million participant contributions coming in through payroll contributions, rollovers about 108,000. Those are down a little bit from the previous quarter. Employer contributions at 221,000, also down a bit, likely due to one fewer payroll periods during the quarter. Distributions, as you can see, withdrawals were up slightly, but terminations were down. Again, terminations would be people taking out lump sums, whereas withdrawals would be all other types of withdrawals, whether they be some sort of in-service withdrawal or a required distribution, installment payment, and so forth. Expenses were up a bit, 102,000. Again, that's the expense that Mass Mutual is charging, 9 basis points annualized. 4 basis points of that is actually what Mass Mutual keeps, and 5 basis points is what we're targeting to fund the county's expense budget account. That number goes up as plan assets go up, and as you can see, it was a fairly good quarter investment-wise with the gain of $20.7 million. The next page of the executive summary, you see a snapshot of participant count. Participant count was up a little bit, a net gain of 29 for the quarter. Average account balances grew about $3,000, and everything else relatively flat. Mobile app usage, visits to the website, not a whole lot of change there. The next couple of pages, we're going to display 457 account balances by investment option. So you could see the activity at the fund level, fund by fund. You can see the first item there, SFGIA, that's the general account. And that is still the largest investment holding in the program. 37% roughly of the plan's assets are in the general account. As you look down this report, the target date funds represent another substantial investment. That's probably the second largest investment collectively. If you added up all of the balances in those target date funds, it represents about 16% of the total balance. And that should continue to grow over time. In a few minutes, I'll show you where payroll contributions are being directed and the target date funds are being heavily utilized. Moving to the next page, you just see the remaining investments in the portfolio. And no major changes quarter over quarter. The next two slides, it's the same report, but now I'm showing you the 401A plan balances by investment option. Very similar story, the general account representing the largest holding at about 22.3% of the plan's assets at September 30th. Collectively, the target date funds, again, are about 16% of the total balance. The T. Rowe Price Large Cap Growth Fund, which is about 3/4 of the way down this page, represents about 18% of the portfolio. So that's another significant holding. But again, like the 457 plan, no major shifts were noted amongst funds during the course of the quarter. Total investment balance, we're looking at, again, the 457 plan and a breakdown by account type, whether it's an active account holder, a beneficiary holder, retiree, someone who's terminated or in a quadro status. And then moving to the right, you see the number of people that have a balance in each investment option. And then the far right-hand column is showing you the investment selection percentage. And this is what I referenced a little bit earlier. This is looking at the last payroll of the quarter and how it was directed. So 21% of that payroll was being directed into the general account investment. And then if you look down towards the middle of the page, all of the target date holdings are listed. And if you add it up collectively, it's about 50% of the payroll is being directed into one of the target date funds. So to my earlier comment, over time, we should see those target date funds continue to grow in stature relative to the other holdings. And the remaining items, investments in the portfolio are displayed here. And down below, you see the totals by category. Again, total participants, 6,251, active a little over 4,000. Actives are down 9 from the previous quarter. Beneficiary account holders at 37 is up 1 from the previous quarter. Those in a retired status is up 3 at 1,066. Those that are classified as terminated are up 33 from the previous quarter. And Quadro account holders at 25 is up 1. The next slide is showing the asset allocation by age category. So you get a sense for how the different age groups are investing. And this is where we kind of monitor general trends. Up on the top section of the report, you can see the number of participants, the balance in that age grouping, along with average account balance. You can see there is a substantial increase in average account balance as participants get older. The 60-plus age group has an average balance over 137,000, which is good to see. And then as you look down the page, you can see how each age grouping of employees is investing their assets. And the general trend that you would like to see here is that the younger someone is, the more aggressively they're investing. And as they get older, you would like to see that become more conservative over time. And this graph is certainly illustrating that point. That blue bar, that first bar, is the stable value asset category, which would be your general account. And you can see it's relatively small, under 10% for those under 30. Compared to those that are age 60 plus, it's around 50%. So you are seeing what you would expect to see, that people become more conservative as they age. This particular chart is just another diversification chart. The first one on the left is looking at the number of investment options that people hold. There are a good number of people, 61%, that have one investment option. As you go to the center chart, what we're looking at here is we're taking out the target date funds because those are considered to be, well diversified investments. So when you take out the target date funds and you're looking at asset categories of those people that have just one investment option, where are they investing it if it's not in a target date fund? 89% of them are investing it in a stable value, which would be the general account. And then as you go to the far right chart, of that grouping that is 100% stable value, what is their age grouping? And you can see that about 78% of those people are age 50 and above. Again, just another snapshot of diversification, asset allocation, pointing to mostly those that are getting older are investing heavily in the stable value area. Participant interactions with MassMutual. This is looking at website and toll-free service usage. Not a lot of change. The numbers are very similar to the previous quarter in terms of people calling in as well as people accessing the website and the activities that they're performing. This is for the third quarter, and you can see the comparison. This chart is for the second quarter, so there's not a whole lot of change quarter over quarter. Primarily, they're logging into their account, and they're checking on their statement of account, their account balance, and a balance summary. So at this point, I would like to introduce David and ask him to speak for a few minutes about his activities over the course of the quarter.
Thank you, Bob. Thank you. I appreciate it. So hello, everyone. My name's David. I'm the education specialist here for the Deferred Comp Plan. So as a reminder, every day I'm interacting with your employees, and I'm scheduling meetings with them to help make them understand the benefits of saving for retirement, how the Deferred Comp Plan in particular can help them save for retirement, and then make them understand what the different investment options are and help them understand the difference between a bond fund or an equity fund. And we go into more detail on all of those different investments. So I'm scheduling meetings on a regular basis, either as a group presentation or as an individual meeting where we're talking about someone's individual needs. And on this page, if we look on this page, we can see at the top, I've separated each quarter separately, and you've seen the other quarters and other reports. We have the Q1 numbers, and there's 3 sections in that: the on-site individual meetings, the on-site group meetings, and the virtual individual meetings. Well, after Q1 of this year, we only had virtual meetings. And that was a pretty smooth transition into Q2, which is that second area on that page. And then at the bottom is what was done over Q3, which is this report. And there were 27 days of scheduled meetings. And how those work, every single month I'm trying different techniques to try and promote these meetings or education events to employees in different ways. So every month this quarter, that quarter we attempted different ways to try to communicate with people. And as a result, that quarter ended up being a little bit less successful than the prior quarter. But I thought it would be a good idea to try to capture different audiences, as doing virtual things is different. But we had 27 scheduled days of individual meetings that quarter. And during that time, 129 participants attended those meetings. And those meetings were to enroll in the plan, or that meeting was to change their investments or make sure they're saving the right amount, or just have some kind of overall strategy for their retirement. In addition, during that quarter, we also scheduled 8 group presentation events, and those were things on asset allocation or market volatility. And we've also been trying just once a month a generic, hey, this is how the Deferred Comp Plan works, and this is why it might be a benefit for you. So if you haven't signed up yet, maybe you should attend this. So that's what we tried in that quarter. And overall, we saw 211 participants over 35 days of meetings. Also, towards the end of the first quarter, we started, we have a recorded presentation of me talking for 8 minutes straight on recorded presentation. And if you haven't done one of those, that's really difficult to record yourself for 8 minutes. And it's included in the new employee orientation packet that's emailed to everyone as they start working here. So we've had on-site, I've been on-site for new employee orientation, and I would speak to the whole group at once about how the plan operates. But now we have also a recorded video, and we've been able to see that that's also been pretty successful in getting people to participate and enroll. However, most of the time that doesn't turn into an actual meeting. Also, on the right side of this screen, we can see the total number of meetings that took place over this year. And that's 571 people attended group meetings, and 614 people scheduled an individual 30-minute meeting with me to talk about overall, employees are reacting pretty well to having these virtual meetings, and we're able to capture people differently this way. There are people that I know I'm not being able to communicate with because they might prefer the on-site things. But at this time, this has been pretty successful in finding people whose schedules might be a little bit tighter and they need something more flexible, or they're in a more remote location and they're not able to schedule something whenever I historically have attended on-site. Do I have any questions from you guys at this time regarding education? All right. Also, this month is National Retirement Security Week, and this month is National Retirement Security Month. And I know Sheena's going to talk about that, but this has been phenomenal. This has been a great month for that event. Lots of meetings and lots of positive conversations. Lots of employees are engaged and want to take the right direction on how to retire. And a lot of people are thinking really smart. They're being proactive and preparing, and not so much reacting and being caught by surprise. So that's it regarding education. Thank you, everyone. And Bob, I'm going to hand it back to you.
All right. Thank you very
I
much.
have
Dave.
one comment. Hello?
Yes, please.
What I wanted to say with David, I like the reviews or the evaluations. Why can't HR make these a class that they can go to, not voluntarily? Because a lot of people said they wanted to take the classes, but they weren't allowed to go because it wasn't a HR planned class.
Are you referring to the survey? Or where's that information from? This is
No,
Brandy.
I'm referring to the education classes he was doing this month, you know, the retirement classes they were having. They were not allowed, how do I want to say this? HR did not say you can schedule these classes, you know, like the regular HR classes. If I'm not making sense, you can just drop the subject. Never mind.
Well, of course, we don't want to drop the subject. We want employees to feel that they can attend. I think I'm a little confused about, and maybe I was listening to David, but David, did you state that employees reported that they weren't eligible to attend?
I didn't speak to that. Well, I know in the survey that we're going to be talking about later, that's one of the points that someone had mentioned that. But while I am able to see the vast majority of employees when they do have questions or want to talk to me, historically, there have always been employees that might not have felt comfortable asking for time off to attend either an on-site meeting or a virtual meeting or something like that. For some of those employees, they might feel that they're not allowed to talk during work time or something about their retirement. So that might be more of an HR vagueness thing where they say, I know, for example, the call center in the Chase building. Right? Is it still the Chase building? Yeah, I haven't been there in so long now. I know historically at the call center, they feel that, we're probably not allowed to have a guy come over and talk to us about retirement. So that location in particular, maybe there's no clear guidance on how are these things allowed to be done at that specific spot. So I do understand Miss Babb, her comment on that. There are some people who feel, hey, am I allowed to attend this event? I want to talk about retirement, but I feel I'm not allowed to. Every once in a while when I have a meeting, it's somebody who does it on their off day, and they say, well, I don't know if I'm allowed to walk away for 30 minutes or something like that and talk to you. However, the vast majority of employees just drop what they're doing and come see me, and we figure out how to get them to quit work.
Yeah, I think they think they need to do vacation time or something in order to attend these meetings.
Okay, thank you for that clarification and explanation. We are going to talk about the survey results today as well. And Tammy and I did start some conversations yesterday about how to address some of the things that came up in the survey. So we'll get there in a little while. I appreciate that feedback. There are some challenges with call centers and institutions and the custodial facilities, for example, but I think this time of COVID has helped us realize that there are some other ways we might be able to reach the workforce, and we're going to keep working with the committee to make some of those recommendations over the next couple of quarters. Okay, Bob, can we turn it back over to you?
Yes, thank you. One last item that I just wanted to go over quickly, and then I'll turn it over to Eric, is the Rollover Out Report. This is something that we've been going over with the committee for the past few quarters, and this is just showing you where dollars are going when they're being rolled out of the plan. So for the third quarter, this is the report, total of 30 rollover transactions exiting the plan for $2.6 million. We group this by, the payee name. So the first one on the list here is also the one that's probably getting the bulk of the activity. That's Charles Schwab. Those 6 transactions on the top of the list there, if you add them up, that represents roughly $1.5 million of the 2.6 outgoing. So this is where the dollars are going. It's not one particular place. It's a combination of multiple places. We are working on this from the standpoint of education. I know David is always reminding people that, leaving their assets in the plan once they separate employment is a great option, and why it's a great option. We developed a flyer around this for use with employees to communicate this point. And the survey also raised some awareness of this point, and I'll talk about that in a few minutes. But overall, actually, 2.6 million, the numbers are trending down. It was a bit higher a year or so ago, and we're gonna keep at it and keep getting the word out there that leaving your money in the plan can be a very, very attractive option after you leave employment. So before I turn it over to Eric, does anyone have any question? Yes, question.
Bob, this is Fonse. Regarding the first amount there, is that more than one individual, or is that just one individual for that $580,000 there?
Yeah, each one of these are individual transactions, so that's one person's account. Yeah.
Are there any other questions for Bob?
Yeah, this is Vincent. About a year ago, we did look at that retiree newsletter, and there was a article from the credit union. David or Bob, what name on here would be that credit union, or are they even listed?
I believe it would be, David, correct me if I'm wrong. Yeah, I believe it's Pershing LLC, which is about a little over halfway down. Yeah.
In the prior ones, Pershing LLC was that situation. I couldn't speak if those 3 in particular are also the same credit union, but probably.
Thank you.
Okay, so at this point, I would like to again introduce Eric Wietzma and ask Eric to spend a few minutes addressing the committee about the pending acquisition of MassMutual's retirement business by Empower. Eric?
Great, thank you, Bob. And good morning, everyone. It's great to be with you again. I'm sorry that I can't be in California because it's 40 and rainy, and we're predicting our first snow tonight. So I would much rather be on the West Coast. But as Bob said, I'm executive sponsor and have been with this plan for a number of years. And so it's always glad to participate in these meetings. The Empower transaction that was announced on September the 8th is progressing nicely towards close. It's still planned for a year-end close, so you should expect somewhere on or about 12/31 that the transaction would close. But I would say the mantra for clients and for the staff is really a do no harm. So the team that's operating the plan today, all the funds, all the pricing, all the guarantees and support will continue right up until close, and then will look remarkably similar on January 4th after close, other than the fact that the business will have transferred. And Empower, there's a kind of from a process and perspective, there are a few regulatory approvals that need to happen between now and the end of the year, and they are all progressing kind of on schedule, and we don't expect any surprises there. The plan for support would be one of a lot of communication and plenty of notice to the committee for any changes. So I would expect little to no change for the committee early in 2021, and communication will start to happen in the first quarter about what that plan would look like in terms of the conversion over to Empower. Empower has indicated that they expect to have all the clients transition over from MassMutual's environment and technology and support over to the Empower platform at some point during the transition. From a deal perspective, the transition is expected to take 18 to 24 months, and plan movement will not begin until the earliest May of next year. And the basic plan that Empower has laid out is they expect to go from simpler plans to larger, more involved plans, and so that would put the county's plan certainly towards the middle or back of the line. So I would expect that you would get plenty of notice from Empower about how the plans will progress over time. They have confirmed that they're supporting all of the investment options, all of the services that you enjoy today. And it's important to recognize there will be a very strong continuity of personnel as well. So David would continue to be the education representative for the county. Bob would continue to be the relationship manager, and all of the folks in the home office who support the plan behind the scenes would also continue in those roles kind of uninterrupted going into 2021. So let me pause there and see if there are any questions that anyone has, anything that you're wondering about that I can answer.
I got a question. This is Vincent. In talking to other record keepers about these kinds of transactions, the one unknown has been, or at least the disagreement has been about the guaranteed minimum rate on any general account product. Is that expected to change, or will that be enforced throughout any company transition or platform transition?
That's a great question, Vincent, and that's been a common theme has come up on many of the calls, and Empower has emphatically said that they will support all guaranteed floors, and those would continue kind of uninterrupted. So any pricing that the plan has, including the guarantee on the general account, would continue post-conversion. So that will continue while we stay on the MassMutual platform, as well as post-conversion.
This is Swanson. What are the biggest changes do you expect, or do you expect kind of a seamless change where the participants wouldn't even notice the difference?
I think that a great question. I think the biggest change over time will be a little bit of the look and feel of some of the materials that participants interact with and the digital tools that they use. So the plan is for Empower to have for example, their website and their mobile app be what all participants and all sponsors would interact with. So that's a different look and feel than the MassMutual app and website. And so there are many similarities in terms of functionality. So all of the basic things that participants can do today, they'll be able to continue to do. But Empower has been a real leader on the technology side. One example they shared with us recently is they've now enabled their site to be able to, at a push of a button, if a participant prefers Spanish, they can not only get some materials in Spanish, everything about the site would change automatically to that preferred language for them. And if a participant chooses to interact in Spanish, as an example, their quarterly statement would come in Spanish as well. So that's a capability we don't have today on the MassMutual site. So those would be some of the kinds of things that I would expect to be different. But from a day-to-day personnel, the messaging about asset allocation, the education sessions that David runs, I would expect that to stay very similar. Was that helpful? Was there something else that you thought?
That's actually great news. I think the Mass Mutual app is kind of lacking. I think I'm not sure if there were buttons that you could have turned on to include more features, but again, to me, it seems that it was kind of lacking. I don't even think we get the basis of the investments from the app. And again, I don't think many people are actually going to the website. You know, at least for me, I just use the app exclusively.
Yeah, and I think those would be areas that certainly Bob and David would be able to post-close demonstrate for the committee if you want to see some of the future kind of coming things around the apps and websites and some of the enhancements that the plan would be receiving.
Are there any other questions for Eric? This is Brandy.
Through the chair, hi, this is Tammy. Eric, would you be able to maybe do a presentation, a quick presentation, possibly at our January meeting of the new website and the tools?
I mean, and that's certainly something that can be arranged, and I think between Bob and I, we'll take a follow-up on that. Just for my purposes, and it's a bit bittersweet for me, but you know, this will be my last committee meeting as executive sponsor for the plan. So while all of the service teams and relationship teams are transferring over to Empower at close, some of the executives that manage the business, like myself, will not be moving over to Empower. But we've had dialogue directly with Empower leadership already, and they have an executive sponsor program as well. So Bob will be working closely with Una Morabito, who runs the organization that Bob is a part of today, as well as the Empower team to have a new executive sponsor assigned. But absolutely, we'll be able to do a demo in the January meeting.
Thank you.
Good to hear that.
Any other questions for Eric?
Well, I hope they treated you well there, Eric.
Thank you so much, and I would just say thank you to the committee for allowing me to participate in your plan and be executive sponsor. I think I take that as a great privilege, and I certainly will miss working with Bob and David. But I know that you are in good hands, and the team is excited about the transition, and I think it will generally be a really positive event for participants as they continue to save for retirement. So thank you so much.
Bob, this is Brandy. Was there anything else related to this item that you would like to cover?
No, Brandy, thank you. That concludes our presentation.
Thank you. So for the committee, we are going to move on to Vincent's presentation, the quarterly performance review, and it's the highest third quarter 2020. So that's the little highest symbol in the middle. It says San Joaquin County 457B Deferred Compensation Plan. So Vincent, we'll turn it over to you. Thank you.
Thank you again. I appreciate the opportunity to present. We are in a very, very interesting time, not only in the economy, but the markets as well. Thanks in large part to a tremendous amount of stimulus. We have seen some nice recovery both in the bond and the stock market. So I shared my screen. I'm hoping that everyone can see on your screen the highest group.
We can.
Yes.
Okay, great. Thank you. And I think it's a testament to my age, but I need to blow everything up really large. So let me know if it's too big or too small. I'm happy to work with some might be on a tablet or a phone, but nevertheless, let's go ahead and flip ahead into the report, page 3. I want to touch briefly upon some of the leading economic indicators that we're tracking. A lot of times people link the economy and the stock market, and it's true to a point, but not 100%. The good/bad news in terms of one of the leading economic indicators, and that's the gross domestic product, or GDP. We have set 2 historical records in the history of the United States. So the gross domestic product is a measure of every good and service produced in a country. The black line, or the far left, is the dollar value of those goods and services. The blue line is the year-over-year change expressed quarterly. So the numbers I'm giving you are annualized. In the first quarter, we did see a contraction in the GDP. The GDP number came out at negative 5.0, driven in large part to the shelter-in-place orders given the pandemic. And then the second quarter is when we set the national record for the contraction of the economy. GDP was negative 31.4% in the second quarter. The advanced number came out for the third quarter today, positive 33.1%. So again, in large part to economies reopening, as well as a tremendous amount of stimulus provided by the federal government, we did see a huge rebound in the third quarter, and that's propping up the stock market as we move into this election. And speaking of the election, I think the conventional wisdom is that the CARES Act stimulus will continue. I think it's just a matter of really who's going to benefit. I think if there's a Republican victory, I think a lot of the stimulus will go to businesses. If there is a Democrat victory, I think the conventional wisdom is a lot of the stimulus will go to American workers. So we'll see in terms of what happens, what is it, next week with the result of the election. So very, very interesting times. Lastly, that unemployment rate, nationally, a measure of full employment is an unemployment rate of 5%. Remember, pre-COVID, it was averaging about 3 to 4%, which was really nice. It ticked up all the way to 15% at the depths of the recession, and then it's ticked back down. Nationally, the unemployment rate is about 8%. In San Joaquin County, it's a little bit higher, at just above 11%. And so we have seen a recovery, at least as measured by the unemployment rate nationally as well as locally. I talked about the rally in the bond market and the stimulus. Certainly the stimulus can come from the legislative branch, the Treasury, but really the biggest driver of this recovery is Jerome Powell, chairman of the Federal Reserve. He has come out recently and explicitly said that they're going to keep interest rates very, very, very low for a long time, 2 years or more. And that's what props up the bond market, because as rates drop, the value of existing bonds go up. And you can see this is evidenced by last year's yield curve compared to this year's yield curve. And rates have dropped up and down the curve dramatically, and that translates directly into this chart here. A good representation of our bond market. So in other words, if the nightly news ever report on the bond market, this would be the index that they would use. It's the Bloomberg Barclays US aggregate, or the AG. Historically, it's been about 3.5% a year. Take a look at that 1 year number, 7%, year to date, 6.8 as of September 30th. As of yesterday, the AG is positive 6.6%. A couple more fixed income or bond indexes, TIPS index, which stands for Treasury Inflation Protected Securities. You can see up 9.2% year to date as of quarter end. And then the junk bond or high yield index is up just under 1% as of yesterday, positive 1.2% year to date. So a nice rally or recovery in the bond market, thanks in large part due to aggressive stance by rates by the Federal Reserve. Moving into the stock market, this is the United States stock market as measured by the S&P or Standard & Poor's 500. Year to date, 5.6% year to date. Thanks in large part to some massive sell-off over the last couple of days. That year to date number is 2.8% as of yesterday. So a little bit of pullback on the US stock market. And then last but not least, the international markets as expressed by the All Country World Index, or what we call the ACWI, about 45 countries outside of the US. You can see year to date as of quarter end, negative 5.5%. As of yesterday, the ACWI is negative 6.2%. So a little bit of retrenchment on the international stock market index with the more up-to-date numbers. So I'll pause to see if anybody has questions, comments, requests for predictions. All right, hearing none, let's go ahead and move into the next section. And I'll be brief because a lot of these data points Bob already touched upon, but certainly they're laid out a little bit differently. So if you have questions, please interrupt. This is the 457 plan, the broad overview of the funds and asset classes. You can see the fund names as well as the dollar amount. These percentages are not the performance numbers. These are the percentages that make up the overall plan total. And so similar to what Bob said, the general interest account is the largest holding at 37%. You have about a third allocated to large cap, about 15% in the target date. Just notice, and this is a future agenda item, but I want to tee this up. T. Rowe Price has these vintages, for lack of a better term, and the plan offers all the way up to 2060. T. Rowe Price is offering a 2065 fund for maybe the younger workers or those that are more aggressive. But realistically, the allocation between the 2055, the 2060, and the 2065 are almost identical. But in order to offer the full suite, you may want to consider that when we hit that agenda item here in the future. As of quarter end, total plan assets were $460 million. Just as a point of note, at the end of 2018, the plan assets were $385 million, so an increase of about $75 million over that short time period, which is pretty nice to see. Bob talked about cash flows, and again, just laid out a little bit differently. You can see we have all the money going into the 457 with the cash flow positive, all the money leaving through distributions and those rollouts that he talked about here in the negative. And so through simple math, back to his point, there was a slight increase of cash flow to the positive, but thanks in large part to the market gains, we did see growth in the plan here. And the average account balance grew by about $3,500-ish, ending the quarter just under $74,000. And then the next section is the 401A plan. Same funds, obviously different plan total. This is just over $20 million as of quarter end. And then the cash flow characteristics are different because of the structure of the plan. You can see asset size is a lot different, but there was about a quarter of $250,000 going into the plan, and then the plan grew by about $1.2 million for the quarter. And then the average account balance, pretty nice, just under $145,000, thanks in large part to that healthy cash flow and strong market gains. So moving into the next agenda item, this section, it's over 2 pages given the length of the investment menu. I just want to explain this. It's called the Investment Policy Statement Compliance Report. And this is where we take all the metrics in your investment policy statement and screen them against the characteristics of all the investments on the menus. And hopefully everything shows green or pass. If there's ever a violation, we'll flag it red or fail. And you can see there are 2 funds that the committee has dealt with over the last couple quarters. The Vanguard Mid-Cap Growth was placed on, was underperforming, placed on watch internally given the underperformance as well as a significant manager change. The committee voted to replace the Vanguard Mid-Cap Growth with the MFS Mid-Cap Growth Fund, and that's slotted to take place at the end of November, so about another 3 weeks. Similar story with the Hartford International Opportunities. This is a fund that has underperformed thanks in large part to the security selection and the sector allocation. This fund was underweight tech as well as more value as opposed to growth, and that caused the underperformance. But at that special meeting, as you recall, the committee recommended and the chair voted to replace the Hartford Fund with the Vanguard International Growth Fund. Similarly, that's going to take place November 23rd as well. But that leaves one fund that's still giving us a little bit of discomfort for two reasons. One, the underperformance with an old sub-advisor, and in early 2020, American Beacon actually terminated the relationship with that sub-advisor. It was Franklin Templeton, and hired American Century. And so given the underperformance tied to the old sub-advisor as well as a significant manager change, it's flagging as failing the metrics in the investment policy statement. So my recommendation is to place this fund on watch, but again, there is a dedicated agenda item right after this, but I just wanted to tee up the discussion. Certainly from a process standpoint, the committee could recommend placing these two funds on watch, but the fact that they're going to be replaced in 3 weeks might make that action moot. But I will certainly leave that up to the committee as well as the chair when that agenda item is touched upon. So I'll pause to see if anybody has any questions. Certainly we can address it during that agenda item. But no real issues with the other funds. I can certainly go through. There are a lot of data points with the other funds. I don't know if you want me to pause or talk about the performance. I certainly can. But no real issues. And that American Beacon International Fund, we're confident that that's still the right fund on the menu.
Got a quick comment. This is Ponce. In regards to the Hartford International Opportunities, I'm looking at the returns on the app actually, and again, it has the returns for 2017 was at 24.7, 2018 was negative 18.6, and in 2019 was 25.15, and then the year to date is 2.96. I thought that they were doing a lot worse than that. Are we looking at the same fund here? The Hartford International Opportunities Fund, IHOVX6 is the ticker?
Yes. And so what we're trying to do is, and I actually have the page laid up here so you can see, and I'll explain what these numbers mean. So every investment option has a primary colored row in this section, and the color of that primary colored row is really much intentional to match the previous section. So purple is international. This is the fund that invests in large international growth companies. And so, Ponce, you're right. In 2017, the fund returned let's call it 25%. In 2018, the fund returned negative 19%. And then in, 2019, the fund returned over 26%. The line directly beneath it is what the index or underlying benchmark performed. And then the line directly beneath that is any outperformance or underperformance of the fund relative to that benchmark. And so you can see, despite the fact that the fund in 2019 was up over 26%, the index was up over 27%. So there was some underperformance to the tune of 1.2%. The other thing that's fairly telling is in the grayed out row. These are peer group rankings as expressed as percentiles. And these numbers, because they're percentiles, will always be from 1 to 100. And numbers closer to 1 are better than numbers closer to 100. And so you can see from a peer group ranking, the fund is also underperformed. And so a lot of that is obviously in the look back. The other part of our analysis is if we stick with this fund, is there confidence either in the management team at Hartford or Wellington, the sub-advisor, or internally with our analysts that this fund is going to come back? And back to my point is it's not. And that's why the committee recommended to the chair to replace this, and that's going to happen. I don't know if that long-winded answer helped, but certainly all of those went to the calculus internally to make that recommendation.
No, thank you very much. I appreciate you going over that again. That's excellent.
Are there any other questions for Vincent?
So Last but not least is the fee structure. And as I said, this is laid out a little bit differently than the data points Bob already mentioned. But really, this is the underlying economics of the plan. This is the 457. Every fund on the menu with the assets, as well as the expense ratio and that admin fee, the explicit tack-on fee of 9 basis points. And so you as a committee can see at any point in time what the economics are. Participants are paying about $1.7 million to the fund managers, about $400,000 to administer the plan. And back to Bob's point, 4 basis points of the 9, or $183,000, is tied to MassMutual, and then the plan or the committee gets the other remaining 5 or $230,000-ish annually. So just from a snapshot of economics, this is an important fiduciary role, and so it's always good to cover so that we all know the dollar amounts. Questions on that report? So if it's okay, can I move into the next agenda item that deals with the watch fund or funds? As I said, although 3 of the funds are flagging or potential watch candidates, 2 of these will not be on the menu in 3 weeks. So I don't know what the committee or chair would prefer to do in terms of the watch status.
So I just want to confirm from the committee that there are no other questions or comments related to Vincent's quarterly performance review update. So if not, I can introduce the next item, which is the consideration and possible action regarding watch status for underperforming funds. So Vincent, if you'd like to go ahead and lead that discussion. I know you've teed it up, but if you want to go ahead and finalize it.
No, thank you, and apologies for jumping ahead, Randy. So yes, part of the fiduciary overlay with the state of California retirement plans is around the process. And so as much as we don't underthink the outcomes, we also have a very, very well-built process because that's the legal standard throughout the state. And so one of those is having a good policy that is updated, but the other part of it is following that policy. And part of that policy talks about the underperformance of funds, and that is this column, but it also talks about qualitative factors. So if the fund gets too big or too small, if the fees get too high, all those sort of things, including significant manager change. So with this particular fund that we're recommending to be placed on watch, it is a victim of both of those. It did have a sub-advisor, again, Franklin Templeton, that underperformed dramatically. American Beacon terminated that relationship at the beginning of this year. And so the underperformance and that qualitative factor of manager change is the reason for the flagging. And I can talk about the red dots with the other 2 funds that are going to be replaced in 3 weeks, but I'll pause to see if anybody has questions so far.
Are there any questions for Vincent? And that's related to the American Beacon.
Or potentially the other 2 funds. But yes.
Are there any overall questions related to the 3 funds for him? Okay. So Vincent, I just want to make sure I'm recapping. Your recommendation is that we place the American Beacon International Equity R6 on the watch list, and the other 2, the Vanguard Midcap Growth, Hartford International Opportunities R6, those are ones that we've already approved to replace, and we are replacing them in 3 weeks.
Yes.
Are there any comments from anybody on the committee? Would one of the committee members like to make a motion?
Mrs. Swansea, I make a motion to approve the report.
And that would include the recommendation to place Beacon on the watch list?
Correct.
Thank you. So we have a motion. Is there a second?
Supervisor Miller will second that.
Oh, Monica seconded it as well. I had to look at
Okay,
the chat.
fine.
I apologize, I was staring at the phone. Donna will take our roll call.
Okay, Brandy Hopkins.
Approved.
Okay, Christine Bass. I'm sorry, I didn't hear that. Christine?
I couldn't get it to work. Approved.
Okay, thank you. Jay Wilberding?
Honey.
Jay? Jay, are you maybe muted?
We'll go back to Jay.
Okay. Supervisor Miller?
Yes.
Thank you.
Madam Chair, I'd accept a thumbs up for Mr. Wilverding. Or a thumbs down for voting purposes. There we go.
Okay.
All right, thank you.
Okay, thank you, everybody. So we will move on to our next agenda item, consideration and possible action regarding the addition of T. Rowe Price 2065 Target Date Fund, and that Bob will be presenting.
Thank you, Brandy. This is an item, Vincent mentioned it earlier today, and I know the committee had a discussion about this at the last quarter's meeting, and that is, would you like to add that T. Rowe Price 2065 fund? It's I guess, the latest fund in the T. Rowe Price Target Date series. It is something that we can make available to participants. It's really up to you if you would like us to add it or keep the portfolio as is. And I don't know, Vincent, if you have some additional insights as to the value of adding it or not.
As I said, the allocation between the longer durated vintages are almost identical. So it's no real advantage from an investment standpoint. It more follows the logic of any new participant who might be late teens, early 20s, who match their retirement age with the target date vintages. And I hate to say this, 2060 might not be long enough. So there are some small pluses and minuses. But if T. Rowe is offering, our recommendation is to add it.
Is there, Vincent, is there any additional cost for adding it, or is this just, I guess, free? Your charges to add that to the portfolio of the options?
I will defer to Mass Mutual if there's any Mass Mutual specific charges, but T. Rowe Price, or there aren't any other additional charges. But Bob, do you want to answer it from your side?
Yeah, I'll just confirm there are no additional fees or charges to add it. Just the applicable fund fee would apply, but there's nothing on top of that, no.
This is Brandy. Are there any other questions or comments from the committee? Would one of the committee members like to make a motion to either add this to our portfolio or keep the portfolio as is?
This is Fonte. I'll make a recommendation to add it to our portfolio since there's no additional cost. It's just going to provide more options.
Thank you, Fonte. Do we have a second from any of our committee members?
This is Jay. I'll second it. And I did find my mute button.
Thank you, Jay. On my regular phone, it's near the hang up button. Sometimes I've hung up. So Donna will take our roll call.
Okay. Brandy Hopkins.
Approved.
Monica Mino.
I'm looking at chat, Monica. There we go. Thank you.
Okay, thank you. Christine Bass. Christine, can you hear us?
Yes, I'm sorry. I said approved.
Okay,
No worries. Thank you.
And Supervisor Miller?
Approved.
Thank you.
Okay, thank you, everybody. We'll move on to our next agenda item, update on fund change implementation and communication, and we will go back to Bob.
Thank you. And again, I think Vincent's covered this one pretty well. I can confirm that the participant communication has been distributed, so people do have that in hand. This change is scheduled for November 23rd, and to summarize, the two changes are the Hartford International Opportunities Fund is being eliminated and being replaced with the Vanguard International Growth Fund. And the Vanguard Mid-Cap Growth Fund is being eliminated and being replaced with the MFS Mid-Cap Growth Fund. Again, participant communication was distributed in mid-October, and this change will be taking effect on November 23rd.
Thank you. Are there any questions for Bob regarding the fund change implementation? Okay. Hearing none, we're going to move on to our next agenda item, which is the Mass Mutual survey results. And this was a separate handout labeled Deferred Comp Survey Results Quarter 3 2020. Bob?
Okay, I will take that one. Just give me a moment. I'll put it up on the screen.
Thank you.
Okay, as you all know, we conducted a survey of participants in August, and these are the summary results of that survey. Overall, got very strong participation, which was good to see. There were a total of 1,305 people who responded to the survey. 1,151 of them were participants in the plan. 154 were not participants. So 88% of those who took the survey were plan participants. The demographics are just highlighted here. The majority of the survey takers have been in the plan 10 plus years, are between the ages of 45 to 65 and plan to retire within 5 to 10 years. When I say majority, I should clarify that. That was the most common profile that we found of the survey respondents. Several of the participants in the 55 to 65-year-old range indicate that they were unsure when they're going to retire, but most of them, there were 344. Most of them, 184 of them, did indicate that they'd be retiring within the next 10 years. Participation, I already covered. Most people were in the plan. Most respondents who do not participate, 154 of them, indicated that either they couldn't afford to or they don't know or understand how the plan works. Those were the two most common responses of those people that were not participating in the plan. 60 of the 154 said, I can't afford it. 55 of the 154 indicated they don't understand how the plan works. One nice thing that came out of this, and I know it was one of the points that we wanted to really drive home with the survey, more than half of the respondents, 54%, indicated that they were unaware that they could continue their retirement account prior or post-employment with San Joaquin County. So there were roughly 700 people who are now at least informed and aware, who weren't before, that they can continue with their account after they separate service. I think part of that misinformation, could be just a lack of knowing one way or the other, but I think part of it is those that talk to outside financial advisors, they're probably being told, when you retire, you ought to move your plan over to, whatever firm it is, and it gives people the impression that they can't leave it there. I know David works really hard at getting that message out that you can leave it here, and I think the survey helped to reinforce that point with those people that were unaware. Website usage and mobile app usage. These are two areas I think that need to be promoted more. Again, I know David does what he can to promote awareness around these, and perhaps just in time, people will adopt more usage of the mobile app in particular as more younger people join the plan. But only half the respondents indicated that they utilized the website. The majority of the non-users indicated that they didn't know how to access the site. Most respondents have not used the mobile app, again, primarily due to lack of awareness that the app existed, or at least that's what how they had indicated. Here's just a little more detail on the plan demographics. On the left-hand side, you can see the age of the respondents and the years they have indicated in terms of years to retirement. And then the various graphics on the main part of the page. How long have you been in the plan? 496 responded 10 years or more. When do you plan to retire? 5 to 10 years seems to be the popular response at 317. Age of respondents, again, the bulk of them in the 45 to 65 age grouping, which probably mirrors your county population, I would think, pretty well. And reasons for those who indicated that they don't participate, these are the various reasons they had to select from, and they could select more than one reason. The two most common, again, were can't afford to participate and don't understand how the plan works. On page 3, usage of tools, website usage on the far left, 562 indicated that they have not utilized the web, 590, yes, they have accessed it. And then app usage is right below it, and that is substantially lower. 278 indicated that they have used the app, 874 have not. And then you can see the primary reasons for not accessing the web or for not accessing and utilizing the mobile app. Again, I think this might be an area that we can try to promote going forward. Promoting the usage of these tools, and maybe even David doing some virtual seminars on how to use these tools better. On the right-hand side, you see some comments that we got. There were a lot of comments overall. Over 200 comments were made back to us, and the county does have a copy of the full response of all employees. Just give you a moment to read through those. And then lastly, education feedback. On the left-hand side, what retirement education topics are you interested in learning more about? The #1 response was pre-retirement planning. Second, understanding the plan's investment choices. Third, am I saving enough? Online tools and resources, basic rules of investing, and how the plan works. Again, these were choices that people had available to check off and select, and people could select more than one answer. So these were the popular ones, the most popular ones that they selected. And then below that, how do you prefer to learn about these topics? This was nice to see, actually. Online webcast presentation was the #1 preferred method, followed by printed material, individual meeting with a MassMutual representative, the website, on-site group meetings, and a phone representative. again, the question was around preference, not around what was available currently. Obviously, when we distributed the survey, we weren't allowed to be on site meeting with people face to face. But I do think this is an indicator that people have adapted pretty well and are pretty accepting of the online or the virtual type of education that we've been providing. So we do plan to continue that into the future, even after the COVID-19 issue has been remediated. On the right-hand side, you just get, again, another dosage of employee comments there. The second comment, I know we talked a little bit about before. David had brought it up, that it's difficult to make time for optional retirement workshops offered during work hours due to competing work demands. If the retirement workshops were made obligatory, like other human resources workshops, it would be welcomed and well attended. I don't know if this is something that the committee can review or have input on, but if there is a way for the county to promote the idea of people attending these workshops that David puts on, I think that would definitely help attendance.
So this is Brandy.
So,
I think
yes.
now that the county has all of the information, the HR team will work to go through all of it and then maybe bring back some recommendations to the committee.
Okay. So yeah, this was just a summary of results, and you know, like I said, Brandy and Tammy have the full survey results, including all comments and whatnot, and we would welcome any feedback that the committee has in terms of things that we can do to improve our education efforts.
Yeah, Tammy's going to share a few comments as well.
Yeah, and this is Tammy, and I will be very brief, but we did receive 212 actual comments, and I was able to categorize all those comments into 12 categories. And what I basically saw that I just would like to bring up is that there is a lot of lack of knowledge on things that we're already doing. And so that's concerning to me because there's a lack of knowledge. And so I plan on addressing every single question in survey results and producing that document and getting it out with help from Bob and Vincent if it's something that I am not able to answer with Brandy's help. So I just wanted everyone to know that. And then also during this past month, Brandy and I have been attending NAGDA conference, video, web streams, WebExes in lieu of the conference. And I did notice that several different cities and counties are getting lists of retirees from their retirement offices. And I believe that maybe this is happening with other entities. And if we could reach those people, that could even help us more let soon-to-be retirees know that they can leave their money on account. So, you know, these are just some of the things that we're going to be looking at and addressing, and we'll get a full response to the committee.
This is Ponce. Speaking about that, again, the transfer of funds after you retire, again, I think it's, I don't know if we have any incentives for any individuals to keep their money there. Again, if I have some funds and I have a Charles Schwab account, again, I would imagine the person who is retiring would want to consolidate all their funds into the Charles Schwab account, especially if the Charles Schwab platform is a little more robust than the current platform they have. But is there anything we could do to possibly incentivize them to keep it there? Again, I know that they would know, again, 50% said, 54% said that they didn't know about it. But again, it seems like it would be a no-brainer to consolidate all your retirement funds into your other accounts.
This is Tammy. I think one of the lack of knowledge with some people is the fact that they don't realize the fees that they're paying compared to what they're paying here. And maybe Bob and Vincent would be better equipped to handle this question, but I do believe the fees aren't as transparent, and even if we can educate people on that alone, I think it may make a difference.
This is Chrissy.
You're absolutely right, Tammy. Yeah, go ahead.
Go ahead.
Who go ahead?
You.
Uh,
Go ahead, Christine.
Okay. Back in the olden days, after you retired, if you had any other investments in other places, you could roll it over into Mass Mutual. But that stopped when, well, it was Hartford, I think. But anyway, that stopped. And they said no, only active could do it. No retirees could do it. So I think that some people were saying, well, then I'll just move it all into one place. And since I can't move it into San Joaquin's, I'll just move it in the one I have. So just letting you know.
Yeah, I think it may have been a while back, Christine, that retirees were not allowed to move money into the plan post-retirement, but
Right.
now they are able to now.
Oh, okay.
So
Thank you.
if they already have an account established, a retiree can move money into the plan. So I think to Tammy's point, I think there's a lot of folks that maybe lack the knowledge, and whatever we could do to try to inform them of what their options are when they're retired and really before they're retired, so that they know this plan is a viable option. The fees are low. For some folks that do everything on their own, I could see where Charles Schwab might be attractive. But a lot of folks, would benefit from having the oversight of this committee, the oversight of a third-party consultant. That's a safety net in terms of, the investment choices that are in the plan are always being monitored, reviewed, and updated. Those are valuable services. And I think it would be helpful if we just got the word out to people and they understood that. It would be helpful in curbing some of those rollovers out of the plan.
The other thing too, Bob, and David, not to underestimate his reach with the participants. Schwab is, like you said, Ponce, robust, but having an on-site local representative is huge. And then thirdly, only 31% of the assets are in that fixed fund, but you have a 10-year treasury paying 80 basis points and having a relatively high guaranteed floor rate on that general account product is also pretty compelling that they're not going to find outside the plan. So I think those are the three things: oversight, David, fees, and crediting rate.
Are there any other questions or comments about the employee survey? Bob, did you have any final thoughts or comments?
No, that completed our presentation. Thank you.
Thank you. Then we'll move on to our next agenda item, National Retirement Security Month, and Sheena is going to provide our update.
Good morning, everybody.
Good morning.
So there are 2 days left in National Retirement Security Month campaign. At the start of that campaign, a letter was mailed to retirees and an email was sent to all active employees introducing them to the campaign and participation opportunities. Anyone who participates will be entered to win a prize sponsored by both MassMutual and Highest. And there have been 8 campaign emails sent throughout the month that you've all probably received. One of the first participation opportunities was to submit a testimonial stating why you are enrolled in the deferred comp plan or why you will be enrolling. We received 23 active employee testimonials and 2 from retirees. The next opportunity was to take a quiz regarding the deferred compensation plan that MassMutual helped us design. A total of 112 active employees took that quiz, as well as 1 retiree. As of today, we have hosted a total of 20 webinars between MassMutual, Highest, MHN, and SJ Sarah. Between all of them, we've had 360 attendees, and 33 of those were retirees. This is the first year we've included SJ Sarah in the campaign, as historically it was focused on the deferred comp plan. However, we wanted to have more of an umbrella regarding retirement this year. SJ Sarah's 2 sessions, called Understanding Your Pension Benefit, garnered 154 of the attendees. I read some of the evals and received direct emails with compliments regarding that webinar, with many stating they didn't know anything about the pension. that they're contributing into and appreciated the offering. I believe because it was just an hour long, it gave more employees the opportunity to attend as opposed to the half-day workshops SJ Sarah offers throughout the year. Overall, the feedback regarding the webinar content and presentations have been great. MassMutual, Highest, MHN, and SJ Sarah all received positive evaluation and comments. The biggest challenge has been the logistics of the webinar format and access for some of our employees. I received some emails and calls from some employees stating they weren't able to view the webinars via their work computers. So I wasn't able to quite verify that, but it seemed to be a pattern throughout the month. So I don't know if there's certain areas, just like David had mentioned, the call center may not have the same access as everyone else. I also noticed that many employees were unaware of who their department training processor was or how to sign up for courses. We learned through this process that the departments aren't consistently contacting staff development here in HR to update who their department training processor is. I fielded about 15 to 20 emails a day from employees that want to know more about the plan, who didn't know even how to sign up, or understanding their pension as they didn't know anything about that either. So even though the pandemic changed the campaign to 100% virtual, I believe we still reached a great number of employees and retirees this for the first time and had a successful campaign.
Thank you. Are there any questions or comments regarding our National Retirement Security Month?
This is Tammy. I just want to say that I attended David's course yesterday, and it was not only very informative, but entertaining. So David, I just want to give you a kudos on your webinar yesterday.
Thank you very much. But it's all the kudos go to Sheena. She's put all this together over 3 months, and she definitely has a vision in place. And over the last 3 years, maybe 4 years, 3 years, however many years she's been doing it now, it keeps getting more and more efficient. So moving it virtual, it's different, but we're capturing a lot more people in a different way. So great job. Thank you.
Agreed. Awesome job, Sheena.
Thank you.
Any other questions or comments from the committee? Sheena, we really appreciate all of your efforts, and I know the pandemic's been difficult for all of us, but it's nice to see that we can continue to push forward with this effort and maybe even use some hybrid models when we are able to do some more in-person training. But you did a great outreach, and your efforts are appreciated.
Agreed.
Thanks, Brandy.
Good job.
Agreed.
So moving on to our last agenda item, are there any final comments from the committee members or our staff?
Brandy, this is Fonse. I have a comment regarding the San Joaquin County rollover schedule.
Yes.
Can you bring that up, or?
The rollovers out?
Yeah.
Bob's going to bring it up for us.
Okay.
Yeah, I'll get it.
Yeah, I'm looking at the information. I'm not saying this is an issue or anything, but do we want to redact maybe the dates on that? Based on the dollar amounts, one could almost figure out who rolled their money out and with the retirement dates on there. So again, I'm not sure. If we maybe redact the dates to just group it in a month, and not provide an exact date, since that's exactly one transaction. You see what I'm saying?
I think I do. You think that somebody could identify themselves or somebody else if they knew who retired on that date?
Not only on, well, I don't think on that date, but approximately that time, the dollar amount, I think you could narrow it down who it is. Again, maybe it's not an issue, but again, I'd probably leave it to the council or maybe the group if they want to keep the schedule the way it is, or maybe group the dates. And I don't know. Again, it looks because I know who retired about that time in September.
Yeah, we'll look at it and bring a recommendation. Bob?
This is Jason. Fonse, I don't think there's an issue, but I agree, and I think I just interrupted the chair talking about maybe bringing a recommendation next time. Maybe you identify them quarterly. I don't think it's an issue as is, but that doesn't mean it can't be better.
Yeah, from Mass Mutual's perspective, I mean, it'd be easy enough. We could just not put a date on there and just say these were transactions in the third quarter. And also, it doesn't necessarily mean that somebody retired.
Right.
This is just when the post date is just the date that the transaction occurred. It could have been someone who retired 6 months ago or a year ago. But we could leave the date off if that's the committee's preference. And I guess a final point, this report is optional. We started doing it because there was a quarter, and it was going back about a year ago now, where there was a real spike in rollovers out, so that we started tracking it on a quarterly basis, and it has come down a bit. So this is an optional report, and I'll look to the committee to give direction as to whether you want to continue to see this or see it, but in a modified manner.
Are there any other committee members with comments or questions relative to this that you would like us to consider? We'll take all of the feedback and work with Bob to maybe make some modifications and recommend back to the committee. Are there any other closing comments or questions from our committee members? If they're not, we just need to check in to make sure that we haven't received any additional public comment during our meeting. Donna's checking for us.
No additional comments.
Okay, we do not have any additional comments, so we will go ahead and announce that our next meeting is on January 28th of 2021 at 10 a.m. We're still undetermined about where the location will be due to COVID, but we'll know shortly and let the group know. We will end our meeting at 11:45 a.m. Thank you, everybody, and thank you for your patience while we were getting ready to go live. It's much appreciated. Have a great day.
Bye.
Thank you, Brandy.
Thank you. Bye-bye.